Now let's have a look at the currency where it closed and also the main share index in the Nairobi Securities Exchange. In studio with us, we have Augustine Misoka, a research analyst with Sterling Capital, to help us look at the numbers, looking also at the CFC results that just came in and some of the numbers that made headline yesterday in the Nairobi Securities Exchange. Many thanks for joining us.
Thank you for having me.
What are your thoughts on CFC results? Quarter 1 results, you've seen them, their profit after tax nearly doubling. And of course, now we're looking at some of the banks that have already issued their results in comparison to how the industry has performed. What are your thoughts on CFC Stanbic?
I think CFC have performed pretty well. You know, their interest income, you know, from loans slowed down a bit in the first quarter, basically due to the political risks that we had in the market in the first quarter. But again, they did quite well in their non-interest income. I think that has been one of their best performers over the years, and they managed to do that quite well, and they posted impressive results. And
let's talk a little bit about their cost-to-income ratio, which stands about 58% against an average of about 50% in the industry. Of course, this has dropped from a couple of years back where it was in the regions of 70%. Is that for you satisfactory, the 58% cost-to-income ratio for CFC Stanbic?
I think CFC Stanbic have come from quite far, at a point where as you've mentioned, their cost-to-income ratio was around 68%. That is at the point where they merged with the Stanbic, and then they've managed to slow it down to a point where now they say it's around at 58%. I think that's quite impressive, and I think going forward, I think they will really be able to hit the the market average of 50%.
All right. Looking at their share price, it closed down marginally to about 60 shillings previously from 60.50. And of course, the results came in after the market was closed. How do you see the share price performing today in light of the earnings?
I think with the impressive results, we might see investor rushing in for the counter. It's a strong counter. I think we will see the share rallying. So after that, the impressive results.
All right. Now let's have a look at yesterday's numbers that made the Nairobi Securities Exchange. We saw it closing down about 0.4, starting on a very low note on the week. Is it something that you expect to proceed as we close today and maybe the days to come in the rest of the week?
I think it was dragged down a bit by Kenya Shillings and a bit of profit taking from Kenya Shillings and Safaricom. But I believe the benchmark rate will strengthen maybe by end of the week, after that slow start yesterday.
Mm-hmm. Yeah. Let's talk about Safaricom, which is mentioned is one of the companies that dragged down the NSE 20 share index. We saw it reducing by about 2.29% to about 7 shillings. So what are you expecting in terms of going forward on Safaricom? What are your thoughts in terms of how the share price is likely to, the dynamics of the share price?
I think it's a counter that has a very strong fundamentals, but for me, I feel at 7 shillings, it is quite fairly priced. It might have been a little bit of profit taking after the rally that made the counter hit 7.35 during the week, but at 7 shillings, it is at a fairly priced level. Mm-hmm. So maybe we might see it go down a bit or even move up slightly, you know, based on sentiments from investors.
Considering this is one of the stocks that is most traded in the Nairobi Securities Exchange, and before, I mean, early this year it was still trading at a very low price, and for about 3 to 4, 5 years it has been stagnating between 2 to 5. That's the oscillating price that it has been at, and now you're seeing it at 7. Is it probably a cue that even retail investors are now taking? It's now time for us to actually get our money and get out.
I think for Safaricom, the disappointment was, you know, after the IPO, really investors didn't quite get what they expected, and that's why we saw, you know, the share going down a bit. But right now it's really picking up momentum, and I think going forward with the impressive results that they've been posting, it's a company which has very strong fundamentals, and you know, the fact that it has a very strong market share and commanding lead in the market, I think the fundamentals are quite good for them, and going forward it might, you know, we might see impressive performance from the counter.
Augustine, now looking at Kennel Cobble, which has been making headlines, but on speculation, you know, of a takeover bid, that it's, you know, that there's someone who's now trying to take it up, and now yesterday we saw it collapse about 7%. What are the fundamentals that are driving the stocks? If you look at the Puma deal that fell earlier this year, and now speculation that they're likely, you know, someone may be looking to take it up, have things changed?
I think for Q1, Kennel Cobble have done a pretty much good job. They have really managed to suppress their costs, and looking at again at the assets that Kennel Cobble hold, and you know, in the region. For them, a deal really, an investor coming in to take up the stock really might be something that's really in the offing. And I believe yesterday's fall was really much more on profit taking. But I think Kennel Cobble, they have tried to turn around things after, you know, the results that they posted last year.
Do you see them reporting a profit this time round?
I cannot really say where they're going, but I think this year they'll report better or impressive results than what they posted last year.
All right.